yen fell on Friday after the Bank of Japan maintained its ultra-loose monetary policy stance in a keenly awaited rate decision. While the dollar stood near a 6-month peak on the prospect of higher for longer U.S. rates, the Japanese currency fell 0.4% against the dollar after the Bank of Japan kept ultra-low rates and its dovish guidance on future monetary policy. Even as Governor Kazuo Yuda had earlier this month said the central bank could have enough data by year-end to determine whether it can end negative rates. The yen last bought at 148.09 per US dollar. Against the euro, the yen lost more than 0.2% and stood at 157.76. Sterling similarly eked out a 0.3% gain against the Japanese currency to trade at 181.8. Data earlier on Friday showed Japan's core inflation was steady in August and stayed above the central bank's 2% target for a 17th straight month. The yen had fallen to a 10-month low in the previous session on the back of elevated U.S. Treasury yields, after a hawkish pause by the Federal Reserve on Wednesday sparked a sell-off in the bonds. Japan's Finance Minister Shinichi Suzuki said on Friday he would not rule out any options on currencies, warning against yen sell-off that would hurt the trade-reliant economy. The 10-year U.S. Treasury yield, which the dollar-yen pair tends to track, peaked at 4.504% on Friday, while the 2-year Treasury yield was last at 5.1395% after having scaled a 17-year top of 5.202% on Thursday. The U.S. dollar rode Treasury yields higher and against a basket of currencies. The greenback gained 0.1% to 105.5, not far from the previous session's 6-month high of 105.74. The Aussie tacked on 0.1% to 0.6423, though was headed for a weekly loss. The New Zealand dollar edged 0.08% higher to 0.5936 and was eyeing a weekly gain of more than 0.5%. While the Fed kept interest rates steady this week, it signaled the possibility of another hike this year, with rates to be kept significantly tighter through 2024 than previously expected. The euro declined 0.11% to 1.065, having fallen to a 6-month low of 1.0617 in the previous session. Sterling was meanwhile 0.14% lower at 1.22775, having similarly slipping to a roughly 6-month low of 1.22305 on Thursday, after the Bank of England halted its long run of interest rate increases a day after Britain's fast pace of price growth unexpectedly slowed. That marked the first time since December 2021 that the Bank of England did not increase borrowing cost, and left traders scaling back their expectations of further rate increases by the central bank.